the consumers is strong enough to not get the U.S. economy into a recession. And I think that you will see dramatic changes in how the U.S. economy even functions.
All right. Hey, everyone. Welcome to Campbell's Coins. Today, I have Lior Gantz with me. He is the co-founder of Wealth Research Group, global investor and entrepreneur. You've seen him on so many channels out there, and this is his second time on my channel. He is a wealth of knowledge, and with everything going on in the world and the markets, he is perfect guest to have on. Lior, a lot has happened since we last spoke 6 months ago. How are you and your family doing in Israel?
Doing well. Thank you. My personal family is doing okay. But
Good.
the country itself is at war, and it's right now you're doing this interview with me. We are on the second day of a 4-day or a 5-day sort of a ceasefire in order to facilitate the conditions to bring back a few of the hostages. So yesterday, 13 came back, and including very elderly women, like 75 and up, and a few children. And today, as we're doing this interview, I think right now 13 more are arriving in Israel.
That's good to hear.
Yeah, yeah.
So the Fed's historic FOMC meeting on November 1st kind of shifted into a more cautious policy mode where they acknowledged how higher interest rates were starting to squeeze households and businesses. However, they offered really no indication of a rate decrease in the near future. Over the last month, we have started to see gold break its 9-month doldrum, surpassing the $2,000 mark on November 24th. Silver is up considerably as well. Given the Fed's acknowledgments, do you see the Fed continuing to hold steady through 2024 or breaking this trend early to correct their over tightening? And what will this do for gold and silver?
Okay. So November 1st was a very important meeting because the Fed basically they announced a rate cut, but they did it in Fed jargon. So what they basically acknowledged are two things. One, the risk of raising is the same as not raising. In other words, it doesn't pay. It doesn't make much sense to keep raising. It's better to just let the lag effect do its job because rates are already super tight. I can tell you that they're abnormally tight or abnormally high because fund managers that I speak with in the real estate market tell me that they can't do a deal. They just cannot do a deal. And if you have an entire sector of the economy like housing, where buyers and sellers just cannot talk right now about prices, then it's tightened. Plus, you can see it from the mortgage industry as well for retail housing, and you can see how insane it is, and the fact that you have almost $10 trillion at this point in money market accounts. That's insane. It's not only an all-time high, but it just shows you how much money is parked in fixed income instruments right now because of the interest rate environment. So I think that they've already announced a rate cut, but the market is trying to understand when, and that's basically how the gold sector and the silver sector, gold prices and silver have reacted. If you look at the probabilities, what we call the CME Fed Watch tool, which is a tool I think everyone should have on their screen all the time. Just watch it one time a day to understand where the bond traders believe the rate cuts are coming. Around the world, there are more cuts right now than hikes for the first time in over 2 years. So if you look at the aggregate of central banks, and ECB just said basically the same thing as Powell. We are just watching the leg effects. So it's a consensus that the major central banks have stopped raising, and now the markets are trying to understand when are they cutting. Originally, the cut was scheduled for July. It moved to the June meeting. I'm talking about probabilities now. And now it's in the May meeting. So that's why you've seen in the last few days a beautiful run up in the price of gold up above 2,000. That's the first thing. So a rate cut that's priced in to May. And what's interesting about what's happening in the last few days is that an additional rate cut was then priced in. So at the end of 2024, up until 2 weeks ago, it was projected that the Fed funds rate would be 4.5. Now it's 4.25. So there's another cut that's now priced in. And that is the reason why gold is doing so well. For silver, I think that as we see the dollar weakened in 2024, I think that will truly help the price of silver more than anything else, a weak dollar. And there are two reasons why the dollar is going to continue to be weak and perceived to be weak. One is that the Democrats and Republicans don't have a plan. And that the fact that they don't have a plan is super damaging for the reserve currency role. If the Democrats and Republicans would meet and even agree to cut into the deficits by $100 billion a year for the next 300 years and close the national debt, even if that was the plan, that's enough to calm everybody down. But since they can't even agree on that, that's a huge problem. The second problem comes from the Trump era, where Trump started to propose that maybe we default on some of the debt to some of the creditors that are now enemy nations, such as China, Russia, and others that are not pure allies. And that is also a huge weaponization of the dollar. So between those two, that is a recipe for a weakened dollar. So that's the first part of your question. I'm sorry, what was the second part?
Well, the second part was just going over what will it do for gold and silver in the future?
Yeah, I think that in 2024, you're going to continue to see higher prices for gold and silver. I think that at some point during the year, you will see an all-time high for gold. I don't know if it will finish the year at an all-time high, but it certainly will, in my opinion, it will arrive after they start cutting in May and into the elections. I don't, for right now, I would say, I think the top or the high for the year in 2024 for me, for gold will be around 2,300, and the high for silver will be between 31 and 33. So that's the way I look at that. It doesn't mean that they'll finish the calendar year like that, but in the next 2-3 years, as the United States continues to build its industrial base and double it, and we see a whole different world because we're fracturing globalization and we're moving into regionalization or a different type of globalization with connector economies, and I can speak to that if you want, but essentially that is going to keep the domestic economy in the United States inflationary, so above that 2% for at least 3 or 4 more years. And if you have inflation running at 3 or 3.5, I mean that's a problem. It's a big deal. It does cut into your savings power and it erodes your natural way of saving, and that will impact positively the price of gold and silver.
Sounds good. Those are some pretty good levels too, 23 and 31. So the U.S.
It could all go all the way up to 33 for silver.
That would be pretty good. The U.S. and many countries around the world are mounting exorbitant debt levels. The U.S. just passed 33 trillion and quickly is nearing 34 trillion. The U.S. Treasury has had to increase borrowing this year to accommodate the growing deficit. The gap between federal spending and revenue widened last year, a lot more than most expected. Many people are feeling it in their pocketbooks, and some analysts are convinced a recession is coming. How do you think the markets respond going into 2024?
Yeah, I don't think a recession is coming. I think that the consumers is strong enough to not get the U.S. economy into a recession, and I think that you will see dramatic changes in how the U.S. economy even functions. We have been accustomed to a GDP that's 70% customer or consumer based. So in other words, spending. The U.S. economy is moving downwards from that, and more of the GDP will be about energy, and it will be about industry. So that 70% spending, or just Black Friday as the most important day of the year, that part of the economy is going to shrink, and you will see America move much more back to normal, or normalcy, where more industry, more technology, just less services, and more goods. And I'm not talking about cheap goods or electronics and stuff that's basic. I'm talking about high-end, super important, lots of added value type sectors in the economy. It's coming back. The United States and other countries cannot trust China anymore. They cannot trust Russia anymore. They cannot trust a lot of the countries that are siding with China and Russia, which means that they have to reduce dependencies, reduce the complexity of the supply chain. They can't keep trusting that the Hormuz Straits and the Suez Canal and the Panama Canal and all of these choke points will be orderly and without piracy and without attacks from Iran and proxies and otherwise. So just understand that we are fracturing that safety of the global economy. Secondly, during the time between the 1990s and the 2010s, during those 20 years of hyper-globalization, where the United States basically annihilated its only threat, the USSR, what you had is you had the Navy, the US Navy, so strong and so much bigger than any other force on this planet that the seas were wide open. You had no problems, real problems, until piracy started to happen in Africa, or reappear in Africa. So I think that right now, with the buildup of the Chinese Navy and with the buildup of Iran's military power, the U.S. Navy is not big enough to patrol all the oceans. We need a new system to replace Bretton Woods, which means that the United States will need to rely way more on Mexico than on China. So I think Mexico is going to be one of the fastest growing economies in the world. And we need to rely more on trade between the United States and Europe. So whether it be liquefied natural gas coming from the United States to Europe, or oil, or because the United States has the cheapest oil in the world right now, because of the shale revolution, they can produce many things that other countries actually produce for a higher price, which means that the United States is in many regards starting to become very competitive on industry, and that it can export that into Europe. So I think that we're really seeing big changes, huge changes. One of the reasons, by the way, that the terror attack on October 7th happened was because Israel and Saudi Arabia were on the brink of normalizing relations. And for Saudi Arabia, the country that where the holiest places for the Islam reside, and Israel, where the holiest place for Jews reside, and Jerusalem being very important also for Christians, that would have been a huge, huge boost to global prosperity, to peace, to inspire people around the world. And obviously, it would have basically killed all of the expansion that Iran has been doing, and obviously Russia and China in the Middle East to create that competing force and chaos to American supremacy. And that was something that, in hindsight, obviously, was too important for them not to react to. But instead of diplomacy, they chose to create an enormous atrocity. So what that tells me is that, one, this is too important for Americans and for America. And I can see why, because if you create that framework from India through Saudi Arabia, Jordan, Israel, and then to Europe, you're creating a competing Belt and Road Initiative that's much more resilient than what China's trying to do. And you basically kill two birds with one stone. You kill the Iranian threat and the Chinese threat. And obviously, Russia has this corridor that they're trying to build that goes all the way to the Mediterranean. And that is actually three birds with one stone. So that's why there's going to be a lot of violence probably around that. But I don't think either Biden or if somebody else wins the 2024 elections will allow his legacy to be disrupted by that kind of force, because whoever normalizes between Saudi Arabia and Israel will be, not only receiving the Nobel Peace Prize, but it will be remembered as one of the most important statesmen of all time.
Mm-hmm. I agree with that. And I kind of want to tap into China since you brought that up.
Okay.
So this is slightly off topic, but it has to do with gold. So there's been a lot of talk about China's gold holdings being a lot higher than they are admitting, with some folks saying it's at least 10 times more. How much weight do you put behind these claims, and what implications do their gold reserves have for the U.S. going forward?
So essentially, what those people are saying is, since we can't rely on anything China says, they may have more than they're claiming. That would run against any logic that comes out of the CCP. So the CCP always likes to exaggerate to the upside anything that they have. So if unemployment is 6, they say it's 3. If their economy is grown by 0.1%, they say 2.3. So they always, if they're trying to exaggerate, it will be to the other side. So I don't, I don't have any insight into that, whether or not they're under disclosing their gold reserves. I don't see why they would, but I have no insight into that. But
no,
I can tell you this.
I think that's somewhat true, because I think one of their mottos is like "shine brightly but not too bright" or something to that.
Yes. So basically, from the art of war, it's all right to look weak if you're about to get up, and you can play dead if you're not dead. Really, you're ready for your next punch, because that means your opponent is off guard. But let's say it's 10 times as high. Let's say it's 10 times as high. So what does that help them? In what regard? No country worth its salt is going to deal with the yuan as the reserve currency for trade settlement, unless they're coerced by the Chinese. The yuan is not a free floating currency. If they want to make it a free floating currency, let's start with that. Let's see exactly where it is trading on a if it was free floating against other currencies, if you don't manipulate it and don't intervene with it. And after we know that, then big firms, Wall Street, sovereign countries, sovereign wealth funds, they can start to deal with it. But until that time, nobody trusts yuan in any capacity, and there's no reason to.
The ratio between physical gold price and the gold mining stocks has been on a downward trend for the better part of a decade.
Yeah.
Do you see this trend hitting an inflection point soon? And if so, what does this reversal mean for these mining stocks?
I'm actually glad you asked that for 2 reasons. One, I really want to answer it. And 2, I created a really special and exclusive report for your viewers on this topic at wealthresearchgroup.com/boom, like a positive boom. Something goes up, not something that comes down like here. So if you check that out, I think it's a 5 to 10 minute read, and it's really important because the gold or the mining equities bull market is going to be tremendous. Signs of inflection. 1, the trading volume on the most mining heavy exchanges in the world is at an all-time low. So that's huge. Like, think about that. The big money, there's no big money in these, and there's no retail money in these. So that's a huge indication that you're hitting the lows. Secondly, gold is at an all-time high. It's not shouted in any of the mainstream media, or it's close to an all-time high. It's not shouted in any of the mainstream media. But let me tell you how incredible this is. Gold is trading at an all-time high against about 85 fiat currencies around the world right now. And nobody's talking about this. So just think about that. It's incredible. Third, the amount of money that's concentrated by hedge funds in the Magnificent Seven, so the top 7 companies in the world, is at an all-time high, and they are weighted at about 30% of the S&P 500. That's very akin to what we saw in the dot-com bubble. And so I think that this combination of higher inflation, of easing conditions that you're going to see right now with lowering interest rates, and the amount of money that's outside right now in money market accounts, and can come back to the market, those three look so similar to what we had post dot-com bubble. Greenspan just cut rates. It did not help the markets. It helped way more real estate and mining equities. I think that that's what you're about to see. Also, keep in mind, so many of these supply chains that the United States has betted on are falling apart. Uranium will not flow freely from Russia and Kazakhstan into the United States as it has. The United States will have to bring back production of uranium. It has currently one negligible little mine. Lithium, there's one mine in the United States. That's unacceptable. Nickel, there's one mine. It's super low grade, and they actually export it. Nickel is there's 6 times more nickel than lithium in the lithium-ion battery. That's a huge problem because most of the nickel comes from Indonesia, Philippines, which is dirty. It's not going to meet a lot of these ESG compliances in the United States, and the rest comes from Russia. So there is a huge boom coming in the mining sector, and I think that the mining stocks will have a phenomenal 2024 for the first time since 2010.
Wow.
Yeah.
That's phenomenal.
In 2016, for 8 months, there was a massive bull market in the mining equities over similar reasons. There was Brexit, and then there was a huge easing of financial conditions around the world. Inflation started to reappear after many years. So that easing of financial conditions from deflation to inflation brought an 8-month rally in mining equities. An 8-month rally was enough to send the GDXJ up by 180%, and some mining stocks by 500 to 1,000. So what I'm telling you is, don't think that this is an opportunity that you can be indifferent to. If you catch this, you can make a decade's worth of returns and more in a few months. But you have to be very alert.
Definitely alert, and just don't hang on for too long.
Yes, I agree. This is a trade. It's a boom and bust industry. It's very cyclical. You need to know what you're doing. But if you know what you're doing, it's going to be a phenomenal 2024. Phenomenal.
That sounds good. Lior, I really appreciate you coming on to my show, for your time. Thank you for talking with us. Have a good day.
You're welcome. Thank you very much.
All right, that's going to do it for us, guys and gals. Thank you so much for watching. If you liked this video, give it a thumbs up. If you didn't like it, still give it a thumbs up. It doesn't hurt you and only helps my channel. I will have a lot more content coming out in the next coming weeks, so I really look forward to doing those videos for you. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.